Hi, this is Mijin from Michu Ceylon University. Let's start today's Michu News for November 28th. Welcome to Mijon, where we continue to uphold the fundamentals of investing in United States stocks. Michu News, Mijun family, it's Friday, although for some of you it might not be Friday yet. Since Mijun subscribers are spread all over the world, everyone is living in different time zones. So there are many people living in Southeast Asia where I am, as well as in Korea, Japan, and other parts of Asia. On the other hand, there are also many people living in the Americas, Europe, Africa, and the Middle East. So our ways of life, backgrounds, and environments are all different, right? We are all living in such different environments. It's very natural for each of us to have different opinions. I've mentioned this before, but let me show you again. Right now, you're looking at a circle. You probably see a single round shape, but even if you believe it's a circle, someone else might insist that it's a rectangle. Because depending on the angle you look at it from, the same object can appear as a rectangle. So there's no need for us to argue about whether this one object is a rectangle or a circle. We always need to remember that depending on our perspective, the same object or phenomenon can be seen and interpreted differently. The reason I'm telling you this is because recently, some subscribers have mentioned that the videos are too long and have asked me to make them shorter. You should know, 249 also left a comment like this just a day ago. I've been a loyal listener since you were in Southeast Asia back in the day. Could you make the videos within 10 or 20 minutes? For busy modern people, videos that are close to an hour long are a bit overwhelming. You expressed your opinion like this, but if you look here, there are 22 replies. The reason is that people with different opinions started bickering with each other. So seeing this situation, I thought I should try to mediate, and that's how I came up with this topic. People have different perspectives. For those of you who are currently working and living busy lives all day, a video that's over 47 minutes long can be a bit overwhelming. On the other hand, if you've already retired and find your days a bit boring, you might actually wish the videos were longer. So it's just that everyone has different perspectives, so I hope you all try not to clash with each other in the comments section. And if you look at it now, Mr. You Should Know's comment isn't rude at all. He mentioned that he's been a subscriber and a loyal viewer for a long time. I wasn't offended at all when I read this comment. In my case, I tend to delete a lot of comments. But the reason is, as I mentioned before, I have a habit of never tolerating rude comments. Previously, I shared which stocks I bought and sold like this. Actually, I'm pretty good at talking about what I've sold, right? That's because it was removed from the Michu One Top Pick. But I don't reveal the stocks I bought additionally on the broadcast, right? I only show these additional purchases to Michu One All-in-One members, to paid members. Someone actually left a comment about that, asking, what are the stocks you bought? And they added a question mark, but I deleted that comment. The reason I deleted it wasn't because I was wondering why someone who isn't a paid member was asking about the stocks I bought. It was hard for me to accept someone just saying, what are the stocks you bought? And putting a question mark without even introducing themselves. So I think it's very healthy to post different opinions in the comments. However, if we show respect and courtesy in the way we express ourselves and leave comments, I believe that having a variety of opinions is always a very healthy thing. Now, regarding this, I'd like to explain why I'm sharing such a long video with you all. It's because that's the perspective I have. Earlier, some of you were looking at a circle and some of you were looking at a rectangle. From my perspective as the person sharing this video, this is how I see it. As I've said many times, I don't want to be satisfied as a creator because I'm not a creator. What I mean is, delivering information is not my role. What I want to do is not just stop at delivering information. I want to have influence over you all. In other words, I have the dream and ambition to become an influencer. That's why becoming an influencer isn't as simple as just summarizing the main points. Moreover, these days we're living in the age of artificial intelligence. If you want, artificial intelligence can summarize investment information for you as concisely as you like. But there's really no need for me to repeat that function. What I want is to have a positive influence on you, to help you in your lives, even if just a little. I create content with the hope that your lives will become a bit healthier, a bit more successful, and a bit happier. Because of that, it's a bit difficult to get straight to the point. What I want is a bit more story-centered, So there's this background, and because of this background, there's this logic, and based on that logic, I make these decisions. That's how I end up explaining things to you all. So even yesterday, when I was explaining the services provided by the investing platform to you, I didn't just say, this service is good, so sign up for the membership. I explained it in detail, right? I originally placed great importance on creating an environment where everyone can win-win. Because of that, I haven't promoted investing to you until now, but now that I look at it, the newly developed Warren Artificial Intelligence tool is actually very useful. It analyzes charts and provides a lot of helpful information. That's why I've decided to actively promote it now. That's why I tell you stories like this. It's my way of delivering information, and I explain it in detail like this to have an impact. And like I mentioned earlier, it's the age of artificial intelligence now, so just delivering simple information isn't enough. So I think it's getting harder to survive now. It's getting harder and harder to survive. Illustration, well, employment. I have 2 kids, In the past, I worked for too long because of them. What I mean is, I moved to Malaysia for a somewhat healthier life. I've mentioned this before, but I'm not sure if you remember. Back when I lived in the United Kingdom, I had to wake up at dawn, record, edit, and quickly upload everything right away. Because there's a time difference between the United Kingdom and Korea. So if I couldn't upload by 2 p.m. United Kingdom time, it wouldn't be uploaded before 10 p.m. in Korea. And if it goes up late, like 10:30 or 11 p.m. Korean time, it would be harder for you guys to watch this content. So that's why I do my best to get it uploaded before 2 p.m. But here's the problem. So I work until 2 p.m. like that. But soon after, the kids come home from school. The kids get out at 3, so from my perspective, after working hard, I should be able to rest, but I can't, because the kids come back home again. And I never rest in front of the kids. I think setting an example is much more important than nagging. So when the kids are at home, I always show them that I'm working, studying, working, constantly researching. When I show them things like that, the kids go to bed on their own, sit at their desks to study, read books, practice the violin, and practice the piano, even without me nagging them. So they make their day fulfilling without wasting any time. That's why I used to work hard making YouTube videos until 2 p.m. And then, when the kids came home, I couldn't rest and kept working until they went to bed at night. Because of that, I had no choice but to work 12 or even 14 hours a day. Now, I moved to Malaysia, right? What that means is, let me say that again. Filming usually ends around 11 o'clock. Then there's a lot of time left until the kids come home. You don't need to upload the YouTube broadcast immediately. So from around 11 o'clock until 2, 3, or even 4 in the afternoon, I spend a lot of quality time with my wife. We go out to swim and we go running too. After this recording, I'm planning to get a massage today. So in this way, my life has become a bit more relaxed. Why did I mention this? So when I try to influence my kids, instead of nagging them, I tend to take a more indirect approach. So by creating a story like this, they see that their dad is always working hard and living diligently, and they think, I should live diligently too. I hope you understand that my way of delivering messages like this tends to be a bit slow. And maybe among those of you who watched the broadcast before, there are also people who just don't want to be influenced and just want the information, right? But if I just tell you the main points like this, and if I explain things in detail like this, it will be much more practical for you when you actually use it for investing later. When there's a story to back it up, you tend to remember it for a long time, and I can explain it to you logically. Knowledge backed by logic can be very powerful later on, so even those of you who just want investment information, if you keep watching these slightly longer videos, I believe you'll be able to build a solid foundation and accumulate knowledge. I talked a lot today, so I'll keep the broadcast short. November 28th, Big Two Shin News. Let's begin. All right, then let's start by briefly going over the current situation of the United States stock market today as well. Yesterday, on Thursday, the United States stock market was closed. So, the S&P 500 map you see on the screen right now reflects the market situation from Wednesday. Now, just like on Tuesday, there were very few stocks that fell on Wednesday as well. So most sectors and most stocks enjoyed an upward trend. Now, let me say again, when the market as a whole rises together like this, it means new funds have entered the market. Money from outside is added. This is called a liquidity expansion. So recently, as the number of rising stocks keeps increasing, the overall market is going up. That means the funds that were scared until now are coming back into the stock market, which is a very positive sign. Well, especially these days. Expectations are rising that there will be an interest rate cut in December. And on top of that, there's also growing hope that the Russia-Ukraine war might come to an end. Because people are expecting these positive factors, even the funds that had given up seem to be flowing back into the United States stock market. It's positive. Of course, if these expectations aren't met, stock prices could fall again. So, for example, if interest rates aren't cut further in December, or if the war continues and the situation gets worse again, stock prices could become unstable. The S&P 500 market breadth has increased to 55 and even reached 46. It fell to 40, rose to 45, then 50, and now it's 55. So the market breadth has started to show signs of a full recovery. Stocks with good long-term trends have now surpassed 58%. It's the same with the volatility index. Now it's at 17 or 19, showing a fairly stabilized trend. It's staying well below the historical average of 20, and even lower than the 20 zero-day moving average of 19.66. Next is the Fear and Greed Index. Right now, it's still staying in the extreme fear zone. Still, it has moved up one level and reached 18. So now the trend is that it's hitting the bottom and slowly going up. The market atmosphere appears to be gradually calming down. Additionally, Bitcoin is performing well. You're now looking at the Crypto Fear and Greed Index. The index, which had dropped to 10, has now risen to 20, marking a dramatic average line. So the market volatility right now, this market volatility is at its highest level. So this market volatility right now is at a significant level. So the market volatility right now, this market volatility is at its highest level. So the market volatility is at a significant level. So the market volatility is at its highest level. So this market volatility is at a high level. The has gone plus 6.38, Bit plus 5.87, Persolar plus 4.5, Coinbase plus 4.27, Advanced Micro Devices plus 3.93, Talon Energy 3.54. In this way, most of the median top picks are showing positive gains, which is a good sign. Right now, Bitcoin has gone up to 91,240 and Ethereum has surpassed 3,000. Now, at this point, we're really curious whether the rally of Bitcoin and Ethereum can continue. I think it would be good to ask Warren Artificial Intelligence from Investing.com, whom I introduced to you yesterday. If you go to Investing.com and click on Warren Artificial Intelligence, the artificial intelligence will pop up right away. Here, it says, Ask Warren Artificial Intelligence. I'll go ahead and ask directly. Bitcoin and Ethereum are showing signs of rebounding. Will this rally be able to continue? So I asked Warren Artificial Intelligence to analyze whether the rebound of Bitcoin and Ethereum can continue in the future. Now it's generating the answer, and it might take some time. As you can see, it's searching the news and doing technical analysis as well. Consider this an analysis that merges all key fundamental indicators. Now here's the summary. Bitcoin has surged 7.2% and Ethereum 8.7% over the past week, showing a strong rebound. However, there are fluctuations in the short-term season and the temperature based on the linkage. Temperature varies for stopping on the map ripen. There are fluctuations in the temperature for stopping lands. We set our goal at 5%, so we talked about it publicly like this. And if we get 5%, we can control Ethereum's movements to some extent. That's the opinion being expressed. That's why Bitmain holding 3% of the circulating supply was actually very positive news. There's also news that buying pressure is building up. On November 19th, after Bitcoin quickly rebounded from its lowest point in 7 months, investor sentiment has been reviving. If you want to hear more specific news about this, you can click Read More here to go to the news. It says some factors are slowing the rally, so we also can't ignore the negative aspects. The volatility is also very high, and there was an oversold signal, but now it's trying to rebound from the oversold zone. Also, the recent 1-month returns are shown, and there's chart analysis as well. Anyway, this wasn't a comment from Mijiwon, but a comment from Warren Artificial Intelligence. It says that a technical rebound has been confirmed. Since we're in an oversold state and short-term buying is coming in after a sharp drop, a technical rebound has been somewhat confirmed. However, a technical rebound does not mean a trend reversal. The basis is still weak. Both 1-month and 3-month returns remain very weak, with volatility still extremely high. So what we need to do is keep an eye on macroeconomic variables. That's why this is the Fed's statement. Whether or not they lower interest rates, that's the most important thing. If the interest rate drops in December, the rally will continue. But if the rate doesn't drop further, Bitcoin and Ethereum will have to stop their rally. That's how you should see it. I sold during the rally and bought several other stocks, including 4 from Mijuan's top picks list. Now let's take a look at which stocks the largest pension fund in the United States actually bought. Be cautious with volatility, macro factors, variables, and technical indicators. So it's telling us that it's still difficult to say for sure that the rally will continue from here on out. Actually, the United States is on holiday right now. Plus, the United States stock market was closed yesterday, and today it will also close early, closing earlier than usual. And also, the media isn't really putting out a lot of news right now. So today, I'll just share one article with you. And as we go through this article, I'll wrap up today's broadcast briefly. If you check the article's title, the largest pension fund in the United States sold Microsoft, and among the stocks they bought instead, 4 of them are included in our United States stock picks. Now let's check for ourselves which stocks the largest pension fund in the United States actually bought. The California Public Employees Retirement System, known as CalPERS, which is recognized as the largest pension fund in the United States, reportedly made significant changes to its holdings in the third quarter. On November 14th, CalPERS revealed through its 13F filing report for the third quarter, submitted to the United States Securities and Exchange Commission, that it newly acquired shares of Bloom Energy. What did the pension fund do in the third quarter? They purchased a total of 361,883 shares, and based on the purchase price, the amount was reported to be $30.6 million. During that time, the stock price rose significantly. Based on Tuesday's closing price, it's valued at $34.1 million. After the pension fund bought it, the price soared. Bloom Energy is currently showing a trend of surging more than 10%. CalPERS also newly acquired shares of AeroVironment, AVAV, a drone and autonomous systems manufacturer. Meanwhile, there's something meaningful for artificial intelligence or artificial intelligence investors. CalPERS has reportedly increased its holdings in several artificial intelligence-related stocks as well. CalPERS added over 250,000 Oracle shares, raising its total to 3,021,454. Currently, there are a lot of doubts in the market about Oracle. Investors are questioning how Oracle will financially handle its ambitious artificial intelligence infrastructure investment plans. Even in that situation, CalPERS continued to buy. Currently, Oracle's high debt has caused many investment funds to withdraw, leading to a poor stock trend. However, you can see that a major institution like CalPERS has recently made a massive additional purchase. That's not all. CalPERS also increased its holdings in big tech stocks like Meta and Amazon. They especially bought Nvidia. They held about 64.7 million shares in Q2, rising to 66 million by Q3's end. So we can happily confirm that they've also expanded their investment in Nvidia, which has the highest market capitalization in the world. However, as they increased investments in major cloud artificial intelligence companies, they appeared short on funds. They reduced their Microsoft stake. CalPERS also sold all of its shares in Arcadia Healthcare, which is a mid and small cap stock. This stock has since fallen by 24% compared to when they sold it, as of Tuesday's closing price. CalPERS made a very good investment decision. So after selling off all their shares, the stock dropped by 24% within just a few months. So that's why it's important to pay attention to which stocks CalPERS is buying and selling the most. Now, if you look at the ranking of companies CalPERS bought the most during the third quarter, the company they bought the most is Meta. They bought an additional $385 million, which means $385 million. The second most purchased stock is John Pierpont Morgan. The third is Lam Research, and the fourth is Nvidia. The fifth one is also a United States stock, Micron Technology, which they bought an additional over $200 million of. Now, if you look at the ranking of the stocks they sold a huge amount of Microsoft. It's $1.25 billion. They cut their Microsoft holdings by $1.25 billion and sold $343 million in Apple shares. They also sold over $300 million of Procter & Gamble, $219 million of Procter & Gamble, and $181 million of PepsiCo. They also bought a lot of companies and bought many other companies and kept buying more companies and continued to purchase more companies and bought even more companies and made additional purchases and kept buying more companies and bought even more companies and continued to buy more companies and also bought more companies. And among these, Nvidia stands out with 7.38% of the total funds invested in Nvidia. They increased the proportion a bit, purchasing an additional 2.06% of shares. Third, although they sold some shares this time, Microsoft is still in third place, Apple is fourth, and Meta is fifth. Amazon is sixth, AVGO Broadcom is seventh, and Broadcom's proportion was increased by 3.78%. They have two Google stocks. GOGLE is currently in 8th place, and GOG is in 9th. If you combine the two, it's actually about 3%. So you see they make up the top 5. They did reduce their stake a little. Lastly, Tesla is ranked 10th. In the case of Tesla, it holds 1.39% of the total funds. Compared to the previous quarter, the percentage actually increased by 2.84%. I think it would be good to keep that in mind. Now, let's read together the closing words from Mijun to wrap up today's broadcast. So why did I show you the portfolio of the largest pension fund? I've written it down here. In Q3 2025, CalPERS, the largest United States pension fund, bought more shares of Nvidia, Meta, and Broadcom. That's not all. According to the recently released 13F filing, Warren Buffett's Berkshire Hathaway bought a large amount of Google stock for the first time ever. And not only did they just buy Google, but Google has already become the 10th largest holding in Berkshire Hathaway's portfolio, with a huge amount of investment going in all at once. Now, in addition, the legendary investor Stanley Druckenmiller, who hasn't recorded a negative return in over 30 years, also made additional investments of $96 million in Amazon and $55.9 million in Meta. Now, let me just mention one more thing. 3G Capital has a 3-year return of 200% and has greatly increased its holdings in Google, Broadcom, and Microsoft. That's what we can confirm this time. Now, and of course, we can't leave this out. Masayoshi Son, SoftBank's chairman, announced he's fully committed to OpenAI. He sold much of his stock and is now investing heavily in OpenAI. I'm mentioning this because many people in the United States stock market are claiming there's an artificial intelligence bubble. But here's the problem. If so many people could easily detect this artificial intelligence bubble, then why? You can't help but wonder why so many investment masters, including Warren Buffett, Stanley Druckenmiller, and Chairman Sun Jung-hui, didn't notice this until September 30th and are still heavily investing in artificial intelligence beneficiary stocks. So the message I want to give you is this. Right now, there are many investors who feel confused because of the artificial intelligence bubble. But Warren Buffett, Stanley Druckenmiller, Masayoshi Son, and many other investment gurus, even in the last quarter, the third quarter that ended on September 30th, have continued to move huge amounts of capital into artificial intelligence. I hope you remember this point once again. That's right. Now, another enjoyable weekend is coming. As we head into the weekend, we need to finish Friday on a positive note. And there's nothing more helpful for ending Friday positively than Tony's video. So for our final content today, we've prepared today's United States stock video, and it's a video featuring Tony. That's it for today's main stock news on November 28th. Today's broadcast was a bit shorter, just as many of you requested, instead of being a long one. It's not that I was influenced by these comments or anything. There just wasn't much news today. So I wanted to wrap up quickly and take some time to recharge. I hope you understand it that way. Until we all retire by investing in United States stocks, let's welcome each other, stay strong, and have a happy day.
Thank you. A few weeks ago, you said the market might be shaky in early January, but still expected a positive trend afterward. Then could you tell us what challenges the market has faced in recent weeks, what we've been able to confirm during that process, and how these factors might affect the market outlook going forward? Yes, I believe the market is still held back by the same issues it has faced all year. The biggest is
the still unclear direction of monetary policy. As you know, the probability of a rate cut in December has been fluctuating, dropping from 60% to 30%, then rising back up to 80%. The second is the volatility of policy. Sometimes information is released or statements are made that mislead people about the direction, causing confusion among investors. As these factors interact, the enthusiasm for the stock market is being significantly suppressed, and overall investor sentiment continues to remain weak. That trend continues in the S&P 500, causing a correction of over 5%. The market's more aggressive sectors have faced an even bigger shock.
They've been hit hard. I'm curious how you view the situation. Over the past 4 days, the market has barely wavered despite facing several obstacles. The moving averages have all recovered, and we've also surpassed last Thursday's high. We also know that the market usually tends to gain upward momentum around Thanksgiving, but this time it has gone beyond that seasonal pattern. Where do you think the market is headed from here? I think the market is ready for a pretty strong rally through the end of the year. Right before that, there will be a tough period.
We just went through it. When I talk to portfolio managers, they say the last 6 weeks were some of the worst periods in their careers. I know that losses are low and risks have been reduced. As the year ends, the seasonal trend looks favorable, and it's positive that the market was strong from May to October. Statistically, there's about a 5 out of 6 chance that the S&P will rise by around 5% by the end of the year. Secondly, I think there's a high possibility that monetary policy will turn more dovish. Even if Chairman Powell speaks hawkishly, we know there's a shadow Fed with a dovish tendency behind him. Thirdly, investor sentiment will eventually move to catch up with this rally. Currently, 80% of fund managers lag behind the benchmark. And from a fundamental perspective, if we analyze looking toward next year, the overall story remains solid. AGT corporate earnings next year appear stable, and I don't believe they've peaked yet. However, the stock price doesn't fully reflect this positive outlook. It seems like you're setting your year-end S&P target at around 7,000. From the current position, it only needs to rise about 25% more.
That's the level. If I recall, last year you predicted the S&P would reach 7,000 in early this year. I'm curious about what happened in the meantime and what obstacles you're considering for 2026. That's right. Looking back as this year comes to an end, it really feels like 5 years' worth of historic events were compressed into a single year.
There was a significant bear market, And we also saw record high tariff increases. In this situation, the chance of the S&P hitting 7,000 in the year's first half has nearly vanished. But surprisingly, the stock market plunged like a waterfall and then completely recovered every single point it lost. That's how strong the market's resilience is. However, when I think about next year, I'm keeping in mind the possibility of another policy shock. That's why I think there could be another 20% correction, whether it's due to monetary policy or administrative measures. In a way, it could be a repeat of this year. The fact that we've already experienced 320% bear markets in the past 5 years means a lot has been compressed into a short period of time.
Just a week ago, everyone was talking about Bitcoin falling endlessly, and there were worries that the Nasdaq might follow suit. There were also major concerns that such a decline could shake up other financial assets as well. Things have somewhat stabilized, but that doesn't mean they're fully participating in the rebound.
That's what it is. Acquia Bordici is preparing. Ehonos will be rewarded for their part, for the transformation. And that incident happened because of a kind of price error, in other words, a system glitch. When that error was triggered, automatic deleveraging was activated all at once. It's definitely a reasonable claim that something went wrong with the market maker's functions.
I think so. That's also because many accounts carried too much leverage. That kind of leverage is what eventually pushed Bitcoin above $120,000. You can't really say it happened all of a sudden. You could say that cryptocurrency is actually a very precise indicator of the market's risk appetite.
It is. When a similar thing happened in 2022, it took investors about 8 weeks to dip their toes back into the market. I think the situation is similar now. I think we're almost near the bottom, but this time I don't think cryptocurrencies will lead the way. Right now, I think cryptocurrencies are actually lagging behind, and the driving force in the market is artificial intelligence. I definitely see the possibility of Bitcoin surpassing $100,000 before the end of the year. It might even reach a new all-time high. Bitcoin sees most of its annual movement within just 10 days. Some of those days are still left this year.
Do you think the overall artificial intelligence ecosystem, like Open Artificial Intelligence or Orbit, which led the market in the first half of this year, can participate again? Currently, companies like Nvidia and Alphabet appear to have taken the lead in the market.
It means that artificial intelligence is still a mega trend. A huge amount of resources and spending are being invested, and it's making a significant contribution to economic growth. We're also dealing with electricity and silicon shortages. So over the next 12 months, I believe that artificial intelligence-related stocks will ultimately move together as a single group. And I don't think valuation sensitivity is as important as many people believe. We're also currently researching this, and we'll be releasing our findings soon. Interestingly, data from 10 years ago shows that the most expensive stocks at the end of 2015 had the best returns over the following 5 years. Interestingly, it's unclear if the recent stock pullbacks were truly due to valuation issues.
I think it's really a matter of who's taking the lead right now and which model is actually working.
What I gained is culture, the scenes supporting dreams, a beautiful downhill road together. Walking together, happy investment with Miju until the day we all dare to retire as national poets.